Hey y'all, it's your girl, the Chart Goddess, and welcome to my YouTube channel. Welcome, okay? I'm super excited to bring y'all this video. I said third times is a charm because this is literally the third time that I have recorded this video. But I guess that there's always a reason for something. So I'm super excited to bring y'all a video on liquidity and how I personally trade in the markets. I do trade supply and demand, but here lately I've been focusing heavily on liquidity, and I love it here. I love it here, okay? Liquidity is one of those things that when you learn it, you stop becoming liquidity, okay? And so many people have asked me on threads, on Instagram, Rashida, what are you doing? Please show us your entry model. And so that is what I'm going to do for you all today. So sit back, grab you a piece of paper and a pen or a pencil or whatever it is that you want to write with. And we're going to dive into liquidity. All right? See you in the next video. Welcome back, y'all. So let's go ahead and get into it. Before we get started, I am going to take you through my morning routine. And the reason why I'm going to take you through my morning routine is because when you're trading New York session, you need to be regulated, okay? One thing that I've learned on this journey was to do everything the opposite way of what everyone else was doing, right? So for me, it was about getting to my higher self, okay? Utilizing trading to help fix the wounds that we carry into this industry. So, you need to shift identity. You just can't come into trading in struggle mode, okay? So one of the things that I have personally, been focused on throughout my journey is nervous system regulation, utilizing neuroscience in trading, and rewiring the pathways of our brain, so that when it comes to trading, we are not stressed out, okay? So my morning routine consists of me going into the ecosystem that I developed for women. I've been working on something like this behind closed doors for a long time, and I had a portion of it on Discord, and I was just like, Discord just ain't giving me what I want in order to help my students get to their higher self, right? So I developed the Velvet Trap. And what is the Velvet Trap? The Velvet Trap is there to trap you into your new identity, okay? We are getting rid of that old self and we're stepping into our new self. And so my philosophy is, if you're aligned and funded from within, then it's automatically transfer to the charts, okay? And I'm a soft life girly. I don't know if y'all know that or not or can see, but I like everything in my life to be at ease, okay? Including trading. So my morning routine, excuse me, y'all. My morning routine consists of me going into my app. I'm going to read my daily grounding note for the day. Today it said, peace is not something you find later, it's something you choose now. And the one that was on my phone was a little bit different, but it hit. It doesn't matter, even if you're not trading, I still go into my app so that I can ground myself for the day, okay? So if I go on a walk, I can just go to the weather, see what's going on in the weather. But the most important thing that we should be focused on is our trading briefing, okay? Now, you have an identity portrait when you first step into the ecosystem, and it's a 60-question process, okay? Once you answer those questions, it's going to put everything together and it's going to give you your code, okay? And what is your code? It's your personality type, right? So once you have that, you go into your trading briefing, and this is what it says for today. Practice a 10-second conscious pause after your setup appears to ensure your striker nervous system isn't just reacting to the relief of the movement, okay? I am the type of person who see and want to do, okay? And very impulsive. So this helps me to know, like, hey, pause before you take that entry, okay? Channel your gatekeeper energy into strictly defending your profit targets, refusing to let communal market noise sway your intuitive certainty. Release the need for a perfect analytical plan. Trust your ability to adapt in real time is more powerful than pre-market blueprint, okay? So these are the things I'm going to focus on. How do I focus on those? I may write it down, or I remember, what it is that I'm supposed to be doing, okay? I go through my gratitude wall to see if anybody left any gratitude. If there's anything in the news that I need to be privy of, I'm going to go in, look in my news to see what's going on, because when I'm getting into the markets, I'm not just getting into the markets blindly, okay? I want to know what's going on. Now, you may ask, like, why are you watching the news when you're grounding yourself? The whole system is essentially designed to ground you before you get in the charts. However, when I'm reading this, I'm not really absorbing it per se, if this makes sense, right? So once I'm done with that, I go to my welcome page. So let's get into it. So now that I have all of that out the way, okay. If you don't know what liquidity is where orders are in the market from arresting orders. It can be in retail traders' orders, okay? Liquidity is where money is, okay? When you think about liquidity, just think about money, okay? Some of the best entries that I've taken have come, okay? And then on top of that, I'm going to go into my vitality sanctuary, mark off my nervous system state, my breath quality, and I'm going to save it because this tracks everything, right? And the reason why it tracks everything is because, we, again, need to ground ourselves and work on nervous system regulation before we trade. So once I'm done with this process, I enter the charts, okay? So let's get to it. And I'm pretty sure you're like, why is she telling us about this? I'm just showing you my routine, right? I don't have FOMO. Okay, I don't have a fear of missing out. If it's not my entry, I am not in the trade. I don't care what's going on. If it's not my entry model, I'm not there, right? So I have two entry models, whether it's supply and demand or liquidity, okay? I prefer liquidity right now because I am not liquidity when I'm trading it, okay? So, first and foremost, let's get into it. I'm always looking for key levels, okay? And key levels in the market can be swing highs, swing lows, your previous weekly high and low, your daily high and low. I prefer to take liquidity entries off of those levels. However, if there's a swing point or a session high or low, I will also take an entry off of that as well. So, and I also want to look at what the weekly chart is doing. We've been in a bullish trend for a minute, okay? And I'm always going to follow the trend, okay? So I'm going to mark up my previous weekly high and my previous weekly low, okay? And I'm going to mark up my previous daily high and my previous daily low, okay? Now, in the midst of that, y'all, I'm still looking to see what's going on the higher time frame. And for me, here on the daily time frame, we do have bearish structure here, right? We have a supply zone on, and you may see it as an order block, however you want to look at it. That's fine, okay? Just as long as you get into the bag, okay? So I'm looking in this area just to see where we are, but I'm going to mark up the previous daily high and the previous daily low. So the previous daily high is also the previous weekly high. So I'm just going to mark up the previous daily low, okay? Okay, so now that I have that, what I'm going to do is drop down to my 4-hour time frame. And I'm dropping down to my 4-hour time frame because I pretty much want to see what's going on. Okay, in my 4-hour time frame, I noticed, let me make sure I didn't move anything out the way. In my 4-hour time frame, I noticed that we have a supply zone. Okay, and we also have a strong imbalance in this area. We also have a weak opening gap. Okay, so when the market opened for the week, it gapped up. So I'm looking at all of that before I take my trade. Okay, now the entry model, so this is my supply zone, and then in between here is the imbalance that I'm looking at, right? Now before we get into how to enter, right, I just want to let y'all know, if you're watching this and you're new to trading, you always want to go with the trend. Okay, when you're trading liquidity, you're not really going with the trend, you're going with the reversal, like you're trading reversals. Okay, and that's what makes liquidity so fun to trade. Now if you was trading supply and demand, you would definitely want to go with the structure. So just to give you all an example, okay, on this 4-hour chart, as you can see, we are in a bullish trend. Okay, how do we know that we're in a bullish trend? We know that we're in a bullish trend because guess what? The market is printing higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high, and then we got a lower low, right? So if I was to drop down to my 1-hour time frame, just to give you an example of a bearish trend, and it was short term, but still, when you're trading a bearish trend, you're going to print lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Okay, and then eventually the market is going to correct itself and return to what it was doing before. Okay, in its simplest terms. All right, so let's go back to the 4-hour chart. So now that I have everything marked up, what I'm looking for, and here's the thing, you can trade this pre-market if you want to. I like to actually wait until New York open. If pre-market didn't sweep any liquidity, then I'm looking for it to do it during New York open. New York open is 9:30 Eastern Standard Time to I would say about 11 Eastern Standard Time, right? I'm in CST, so I'm at the chart zone at 8:30. Okay, now when I'm doing my pre-market routine, I am looking to see, okay, what is the market doing? Where is it at? Where could it possibly go, right? So again, we have a 4-hour imbalance, and then we have a supply zone here. So from there, excuse me y'all, I'm going to drop down to my 1-hour chart. I'm taking you through time frames so that you can see how I personally look at the charts, okay? And I want to see, let's go back and I'm going to rewind this. I want to see what's happening before the market's opening. As you can see, this is from yesterday. This is from Tuesday, okay? Price came down, swept this liquidity, went back up, okay? I'm always going to mark up my high points, my swing high and my swing low, okay? So these are my high points in the market. This right here is a London high, so I'm going to put that as a London high. And we have a London low. Okay, so okay. So what I want price to do during New York session is sweep one of those areas of liquidity, okay? If it was to come here and sweep this area of liquidity, that is a great trade. Why? Because we're sitting in a higher time frame imbalance, okay? we're also sitting in a higher time frame imbalance with this, so it can play out one or two ways, okay? So once I'm done with that, I go to my 15-minute chart and I'm looking to see what's happening in the market, okay? So again, I don't take a trade until 8:30. Now here's the thing. Price will sometimes sweep liquidity and give you that entry model before 8:30 comes. If you do that, just make sure you get your money and get out the market, okay? You don't need much when you're trading liquidity, okay? So I'm sitting on my hands until I'm in, excuse me, until I see my entry model. And I'm going to show you how I enter. There's different ways that you can enter and different patterns you can look for when it comes to entering off of liquidity. However you want to do it is fine. Some people, know like, hey, once it gets to this level, it's going to sweep it, right? I like to wait and see. I like to have my confirmation before I enter the trade. So I'm looking at all of these time frames to make sure that that whatever I do when I'm taking this trade, that it lines up, right? So my entry is either going to be on the 5-minute or the 1-minute. I prefer the 1-minute. And why? Risk management. I don't like to be in a long drawdown. I don't like to, if I get stopped out, I don't want to get stopped out in more risk than I want to hold, if this makes sense. I don't like it. It makes me uncomfortable, and I just don't like it, right? And so I'm like that in real life. Like, certain things make me uncomfortable if I don't have control, right? And so there's a level of control that I need when I'm trading, right? And you can't control the outcome. However, if I can manage my risk, I am willing to do that, right? So now I'm looking for price to give me what I want, okay? Now, if y'all have not noticed, let's go back to this 15-minute time frame. If y'all have not noticed, there's different types of liquidity. You have internal range liquidity, which is normally your fair value gaps, your imbalances, your inefficiencies, however you understand what that is, okay? Retail traders call them fair value gaps, but I want you all to think along the levels of institutions, right? When you all get in the market, don't think like a retail trader. Think like an institution. Where is the institutions more likely to push the market, right? Equal highs and equal lows are something that you should be privy of when you're trading, okay? Also, external range liquidity. So the market really just goes from internal to external. And so external are going to be your swing points, your swing highs, your swing lows, your weekly high and low, your previous day and high and low, your key levels, right? And like I said, the best trades off of liquidity typically happens off of a key level, okay? So what we're going to do is wait for the market to open for our entry model, okay? So let's go back. I'm going to drop down to the 1-minute time frame so that y'all can see the type of entry that I personally take off of liquidity, okay? Okay, there we go. So what I look for when I'm taking a trade off of liquidity is what most people may call a V-shaped recovery, engulfing candle, or engulfing pair, whatever, however you call it, right? That's what I personally look for. Now, are you always going to get an engulfing candle? No. And if you're new here and you don't know what an engulfing candle is, or engulfing pair, right? It is when the candle on the right completely engulfs the candle on the left, okay? My favorite thing to see in the market is when a bullish candle comes back above, right? And sweeps the previous low off of the bearish candle and sweeps the liquidity, okay? This is my favorite, okay? Now, does it happen like that all the time? Absolutely not. Sometimes you'll get price to come back down, sweep liquidity, and then both of the candles do not have a bottom on it, right? And it'll trade back inside the range. So what you're looking for is price to trade back inside the range when it comes to liquidity sweeps, okay? Sometimes you will get a bearish candle to sweep the previous low, okay? And it will leave the wick, and I'm going to show you an example of that. But also on the way down, what you want to see is price creating a fair value gap, okay? I'm going to show you what I'm talking about, okay? You want to see price short, printing a fair value gap, okay? So let's say you missed the entry off of liquidity. I'm going to show you another entry, okay? So for me, my entry would be here, okay? Like I said, I'm an aggressive trader. I like to manage my risk, okay? I like to manage my risk. When I'm inside of a trade, as long as I'm, managing my risk and everything is going great, I'm good, right? Now, Rashida, what if you get stopped out? If you get stopped out, wait for price to continue, to complete what it's doing, right? Get back in your trade, okay? So if my first trade clears, I'm out for the rest of the day. I don't care what the market is doing. I'm not interested in getting back in. I'm more interested in preserving my capital, okay? If my first trade was an L, I get back in after I have added confirmation. If that second trade is an L, guess what? I'm sitting on my hands for the rest of the day. It is just, it is just that simple, okay? So my entry model is entering off of the reclaim back inside of the zone, okay? Where's my target? Well, remember what I said earlier about equal highs and equal lows. Okay, price is attracted to those areas, okay? And we know that in the retail world as a stop hunt, okay? Now, are the market makers, the banks and the institutions, are they, specifically hunting your particular stop loss? No, they're not. But they know that traders are going to put their stop losses in their area. Why? Because on their end, they're seeing a pool of orders, okay? They're only seeing buyers and sellers in the market. We see the candlesticks. We see the wicks, right? So to them, hey, let's push the market here, go and absorb these orders, and then go back in the direction that we originally intended to, because they cannot press buy and sell like we do. They have to have enough liquidity in the market in order to do so. So that's why I said, if you can master liquidity, you ain't going to become liquidity, okay? So what is my target? After I've entered, I'm going to go to my long position tool, and this is up to you. You can take a 1-to-2 ratio. You can take a 1-to-5 ratio. But for me, in my household, I like to get my coins. So I'm not going to risk more than I want to make, right? So a 1-to-1 to me is not feasible, right? Because I'm risking the same amount, right, to get back the same amount. Like, come on. What I'm going to do is take it to either that supply zone, if it's bullish, if I'm taking a buy, right? If it's bearish, I'm going to take it to a demand zone, or I'm going to take it to the high of that zone. Okay. So, which will typically yield you a 3R. Okay. So this means that whatever your risk is, you make it 3 times that amount, okay? Now, let's watch this trade play out. Now, I know a lot of people are going to be like, oh, of course it's going to play out. You just hit replay, right? This is a trade that I took, okay? But it's good to see it this way so that you can go back and practice on your own. And I actually want you all to practice. Now, let's say that you originally missed the entry from liquidity, right? Again, whenever it sweeps, If price is going to continue, typically you're going to get a candle body closure on that key level, okay? If price is going to sweep, you're going to get it to trade a little bit past that level, and it's going to reclaim back inside of the range, back inside of the zone, okay? So the fact that price left the previous weekly high, for me, lets me know that they're not finished doing what they need to do, okay? So let's say you missed the entry, the original entry that I took, okay, which is aggressive. Now, how do you get in? Remember, I mentioned you want to see a fair value gap, imbalance, inefficiency, however you want to do it. You want to see that on the way down, right? And you also want to see price inverse it, okay? Which means that when price takes off or come back inside of the range, you want to see displacement, okay? And if you see displacement, guess what? Okay, this is how I teach my students. And I'm going to show you. Give me just a second to give you an example of what I'm looking for. The middle line. Let's just make it pink for the time being so you can see. Okay. The equilibrium, or the 50% of a fair value gap, you can either put your entry there or at the top, all right? If you don't want to do that, wait for price to close back outside of that range, or outside of that fair value gap, right? So your entry can either be the 50%, okay, or this candle that closes back outside. And you don't need an engulfing candle. You just need a candle, a strong body candle to close back outside that range, okay? A doji doesn't count, okay? When you see dojis or any candle that has long wicks on either side, that's indecision in the markets, okay? So you need price to come back in and retest and then trade back outside of that zone. So your stop loss would go below this candle, or right here, or below the fair value gap, okay? And still in all, you will still target the high of this particular zone up or up underneath, okay? And when you're trading, you really want to manage your risk. So if you had 10 contracts, once you hit a 1 to 5 or you hit your first TP, go ahead and break even and remove some of those contracts, okay? Get your profits off the top. One thing that I know and I see is, you know, people letting their profits turn around on them. If you're trading one contract, you kind of cannot take anything off. You can't take anything off, but you can trail your stop into profit, okay? Now, what does that mean? I'm going to show you. So if you enter, let's say you entered here, and then you hit your first TP. Well, you're just going to take your stop loss. Let me turn this off. You're going to take your stop loss, trail it. Every time a new candle form, trail it. Just like that. If you get stopped out before you hit your TP, that's fine. You got your money, right? So if you're only trading with one contract, and sometimes, and I'm saying that because if you're doing one mini or you're doing one micro, depending on if you're in the combine or not, right? You want to if you're trading the combine or a live account, you still want to manage your risk. But if you're only trading one contract, just trail your stop into profit, okay? If you're trading multiple contracts, just close out some of your contracts, and then you still can trail your stop into profit. You just want to make sure that you're managing the money that you're making in the market, and you don't need much, okay? So let's find another example, and I'm going to take you to today's example, okay? I'm going to give you a good example of what it looks like if you miss it, right? Not necessarily miss it. Let's say it's pre-market, right? It's pre-market. And the sweep that you were looking for has already happened. I'm going to show you how to do that. Okay, so I'm going to show you an example from the day, and what I want to do now, every single day you're going to go in and mark up your previous daily high and your previous daily low. Okay, you're always going to do that on a day-to-day basis. So let me take off this lower low, London low, and it's London high. Okay, so this is today, so we're marking up yesterday. Yep, I'm going to mark up my previous daily high and my previous daily low. Okay, now I do mark up my previous daily close, but that's going to be another class because I don't want to confuse you all. Okay, now that I have in my previous daily high and my previous daily low, the reason why I like marking these up is because this price is telling me exactly what it wants to do. I'm looking for what happens inside of that range. Okay, that's what I'm looking for. So if it's 8 o'clock in the morning, I'm looking to see what the market has done overnight. Now, some people teach about the overnight low or the overnight open or the midnight open, right? I don't necessarily focus on that. My thing is straight key levels, okay? So now that I have all of that there, I'm looking to see what's happening in the market, okay? So we're going to go back to pre-market. So this is 9 o'clock a.m. And I'm looking to see, okay, like what has price done? We've tapped into our supply zone. We've reached the top of the previous daily high. Now, what you should be looking for when you're trading key levels and liquidity is what is price doing on that level? Did it give you a break of structure or did it reject, right? So if I was looking at this coming into the market, I'm like, dang, we got to reclaim back inside of the zone, okay? So let me go back because I'm giving y'all my thought process and how I trade, okay? Looking at this and knowing that we had a higher time frame supply zone and we had that imbalance. So although we tapped into the imbalance, we traded back outside of it, price is eventually going to go back to the supply zone, right? Or the demand zone, depending on, you know, the trend, okay? So going into opening, I'm looking to see, okay, price just swept this higher time frame zone, right? And why is it attractive? Because we have equal highs at this area, right? Or relatively equal highs. So this is rest in liquidity, which means that, you know, there's orders up here for people who were selling. This is your buy side liquidity, right? This is your sell side liquidity. So there's orders up here and stop losses, right? Liquidity, because they can't see your stop loss. They only see orders, right? And so of course price is attracted to that. And guess what? Once it swiped just a little bit of that liquidity to fulfill their orders, right? Where is it going to go? So if we sweep a previous daily high aggressively, 9 times out of 10, we're going to the previous daily low. Okay? We're going to go lower. So now that I'm seeing this going into the market, you know, it's not New York open, right? Which is what I normally look for when it comes to my entries. Again, if you want to take this trade at New York open, you can, before New York open, you can, because pre-market trading, pre-market setups be lit. Okay, let me just tell you that. Pre-market trading is lit, okay? Especially if you can find a good, like a really nice entry before New York open. You in and out the market before anything happens. Now, I will tell you this. Don't go into this blindly if you're trading pre-market. Always look at your red folder news to see what's going on. If you're just focusing on technicals when you're trading and you're leaving out the fundamentals, you're trading blindly, okay? I used to be like that. I was like, I don't need no news. I can just read the candles. Well, I can read what's going on in the chart. I can read price action, order flow, volume, whatever you want to call it. But if I don't know the reason behind the move, then I'm blindsided, right? Because I think it's going to buy, but the news said otherwise, right? So fundamentals matter. So 5-minute chart, okay? I'm waiting to see what price is doing. Now, could you have taken this? Absolutely. Why? Because we got to reclaim back inside of the zone, okay? So I'm looking at all of this before I take my trade. Now, let's say you're the pre-market person and you wanted to catch this trade. Well, you would have ate real good, real good off this trade, because the market just traveled in this direction the whole entire time. So again, remember when I told you sometimes you're not going to get that good sweep, right? Sometimes you'll get where the candles are almost equal at the top or the bottom, right? So what I'm doing now is looking like, let's say I wanted to take this trade pre-market, right? This is your entry. It doesn't matter how big or small the candle is. You just want the candle to have more body than it does width, okay? So this is your entry. Let's put this down for a short. This is your entry. Stop loss below the zone. Excuse me, above the zone. We can put it up in here. What are we going to target? Here. Okay, you can target that. Is price going to come down there and reach it? Yes, right? Eventually, okay? Eventually, it comes back down to that zone, right? And today, this is for today, actually. This happened today, okay? So you can either take it to this demand zone or you can take it to the low, right? And what I like to do is go back to my 5-minute chart or my 15-minute chart just to see what's resting below. I'm going to put y'all on game real quick. Candles with no bottom wicks is very attractive, okay? I have a student and she uses my supply and demand strategy, and she entered where candles do not have any bottom wicks. Why? Because that's an area that they're attracted to, okay? And you may know them as rejection blocks. Okay, so did price hit TP? Let's find out and see, y'all. Let's find out and see. So yes, price hit TP. It been hit it back here, right? Now, so this is for you if you didn't get in or if you took a pre-market trade off of that entry, right? When you're trading liquidity, you need for it to sweep and reclaim back inside of the zone. Okay, now is this strategy 100%? No, because let's watch to see what happened when the market opened. Okay, so I'm looking at these two levels, but I also know that price may go lower because what are we getting on the higher time frame? First of all, we're getting a double top, right? And price is moving back towards this area. So this is our opening gap for the week, okay? So if you need to see how it looks, I always recommend to turn on your Hikanashi candle so that you can actually see it, okay? Which is also a demand zone. So price likes areas like that. So if I'm targeting one area of liquidity, I'm looking for it to go to the opposite area of liquidity, okay? So I actually want to see what happened for the rest of the day. What happened when New York opened? Okay, so let's see. Now, we did get the entry. Now, if I go back down to my 1-minute time frame, okay, and I'm going to show you the difference between the other trade that I took. On the 5-minute chart, we have the entry that I would normally take, okay? The 5-minute chart. But if I'm taking that entry on a 1 minute chart, that's not my setup, okay? I like to see a clear sweep of the zone, right? So something that looks like this. Let's go back. Let me lock this so I don't move it. Okay, I'm looking for something like this or something like this when I'm entering on the 1 minute time frame. For me, this isn't my entry. I'm going to, skip that particular trade. Okay, I need a sweep. And there's a certain, like I said, there's a certain pattern that I look for. Okay, so let's look again. Okay, did I get that sweep? Yes. Did I get displacement? No. Okay, so I'm just waiting. I'm just waiting because there's a certain pattern that I'm looking for. Let's go back to our 1 minute time frame. Did I get it? In this case, I probably would have taken this trade. Even though I didn't get displacement back above this zone, I did get a fair value gap on the way down, right? And then I had price to trade above that particular zone. So for me and what I see, I would have taken a trade off this level. Now, I would prefer the bullish candle to look like this bearish candle. What do I mean like that? What do I mean by that, right? Some people call it a V-shaped recovery, but I would have preferred to see the wick from the bullish candle sweeping instead of the one from the bearish, if this makes sense, right? Because for me, that's a high probability setup, okay? So I still would have taken this trade. Would it have been a no drawdown trade like I typically talk about? No. You would have had some drawdown. So I'm going to take my stop loss a little bit below this level here. Okay. Let's turn off my magnet. I'm going to take my stop loss here. And I want to make sure that I'm able to target at least the high of a zone. I need to get my money's worth, right? So in this case, you would have did 2R, and that's really good in trading. You don't need much, right? In this market, this ain't the market that we had in 2024, 2023, right? We're in a market where a tweet can move the market. Trump can cough and move the market. So you really have to get your money and get out, right? This particular trade would have only taken you 14 minutes. Actually, let's see. If we go for right here, 27 minutes in and out off of liquidity, right? Now, did you have to wait for your entry? Yes, but at least you got it, right? And so on this 5 minute time frame, like I said, you could take your entry on a 5 minute or a 1 minute time frame, however the case may be. I like to manage my risk, right? This probably would have been a nice trade, but seeing the direction that the market is going is risky, right? Because when you're trading liquidity, you're doing reversals, okay? And reversals can be some of the best trades, right? If you traded supply and demand, you would have waited for price to push in this area and then trade down further, okay? So let's see what price did for the rest of the day. All right, so we would have gotten a really nice trade off of this. And here's one thing that I want you all to realize. Again, the best trades happen off of key levels, okay? Now, another reason why I wouldn't have taken this trade is because we're currently sitting at a previous weekly high and a previous daily low, okay? What I've learned in my 2 years of trading, well, it'll be 2 years in June, right? If price is typically that close to another key level, it'll go ahead and sweep it, right? And then go the opposite direction, okay? If it leaves that behind, then they're not done. They just need to gather up enough orders to be able to push the market in the direction that it needs to originally go, okay? So I hope you enjoyed this particular, and it's just touching the surface level of liquidity. I can go in detail about internal range liquidity, external range liquidity, equal highs, equal lows. But my model is based off of key levels, okay? And they're even more predictable. And people like to say you can't predict the market, but you kind of can, right? They're even more predictable when they're sitting, when price is sitting inside of a zone next to the key level, right? So your session highs and your session lows, okay? I like a clean chart, so I really don't like to put London high, London low, all of that stuff like that on my charts. So if I enter, I know if I'm entering here, right, off of a key level, the next zone for it to reach is whatever it left on the way down, right? And sometimes when liquidity is swept, it will target the pre-market high or the pre-market low. It just depends, right? So don't get caught up in the markets and become liquidity. You have to sit on your hands. You really do have to sit on your hands, okay? So I hope y'all enjoyed this. If y'all have any questions about anything, please feel free to ask, okay? Comment below, message me on Threads, and guess what, y'all? I want to show you this really quick. If you are wanting more in-depth information about how to trade liquidity and imbalances, go to pinkexecutivesociety.io. Go to Step Into Your Glow and sign up for the cohort, and we're going to have class June 21st through the 24th. And it's been like a big response to this, so I may add in an extra day. Now, if you are a woman, you will have access to the entire Velvet Trap system for 7 days. And if you're a man, you can still come. You can still, come join us, and I'm still going to give you the same exact treatment and the same exact knowledge as everybody else. It's just my community is, guided around women, right? And there's a reason for that, okay? But come learn, let me know if you have any questions about anything. So that concludes the liquidity course. I'm just touching the surface of it to give you this and to help you understand this in the simplest form. We can go in details about this, right? But it's so much to learn, right? And something that I've noticed on my journey, I've been trading 2 years in June, okay? And some people are going to ask, well, how do you know all of this in 2 years? Well, there's a long story behind it, but let's just say I've been teaching since the beginning of my journey, because I used to be a part of a company, and I dove into trading, y'all. I would stay up studying till I was blue in the face, right? My mom trades, and she is who got me back into this, and I only literally got back into it to help her learn how to trade. And I was like, I'm only doing this for you. I don't want to learn how to trade. I don't want to do this. And then I end up falling in love with it. And in like 3 to 4 months, I hit my first 4 figures in my live account. So I want y'all to know something about me. I am not a demo trader. I can't stand being a demo, okay? If it's a day that I need to take a break or I feel like I'm gonna go on tilt, I'll go in a demo account then. But when I'm trading, I'm either on a prop firm or I'm in my live account. And y'all may say, well, prop firms are simulated too, but they pay. Okay? So if you ever see me taking any trades, I'm not going to post anything that is not a live account. Okay? Let's just put that out there. The people that's in my community, they know I'm a live girly. And I've done that because I wanted to fix my relationship with money, right? If you grow up in a lack mindset, in survival mode, you're bringing all of that old identity and all that old trauma into a new space, right? And doing that is going to traumatize you when you're trading. So for me, my thought process behind trading was, if I master myself through trading, like each roadblock that I've had in trading, I correlate that to something that is lingering in an old identity or an old mindset, right? And I use neuro trading and neuroscience, I use neuroscience in trading to literally rewire my pathways in my brain to create a new identity, nervous system regulation, and to also heal parts of me that I have yet to heal, right? So I really do believe that when you lock in on the process, master the process. Don't try to master money. You cannot come in this industry in survival mode trying to make the money, right? You're going to have to master the process. And most people don't want to master the process because in it's an internal fight, right? So I've studied, I've looked at charts. You know, I taught myself how to trade supply and demand. I taught myself how to look for liquidity. And it's just a breakthrough. And I really do feel like each level that you get through internally is going to reflect on the chart. So if y'all have any questions about anything, just come holler at your girl, okay? I'm not one of those traders that's not going to talk to you because I want everybody to learn, okay? If you have any questions about anything, go ahead and drop it below. Or hit me up on Threads at The Chart Goddess, Instagram at The Chart Goddess, Facebook at The Chart Goddess. And if anybody is messaging you talking about join my Discord, I do not have Discord on purpose. If it's not pinkexecutivesociety.io, it's not me, okay? So I love y'all. Have an amazing day. Bye.